Trump said his move followed China's decision to raise tariffs on $50 billion in U.S. goods, which came after U.S. announced similar tariffs on Chinese goods on Friday. From a negotiation perspective, it's a powerful tool. From a market perspective, it leads to increased uncertainty. In the near term, we would expect to see volatility in markets as they attempt to price in the net impact of tariffs, said Michael Olivia, a financial planner with Westpac Wealth Partners. At 9:40 a.m. ET, the Dow Jones Industrial Average was down points, or percent, at 24. The S&P 500 was down points, or percent, at 2, and the Nasdaq Composite was down points, or percent, at 7. The sell-off was broad-based, with 29 of the 30 Dow components in the red and 8 of the 11 major S&P sectors lower. Volatility returned with a bang. The CBOE Volatility Index, commonly known as Wall Street's fear gauge as it measures expected near-term volatility in the S&P 500, hit a near 3-week high of points, before easing to. Demand for safe havens saw yield on the 10-year benchmark U.S. Treasury drop to its lowest in more than 2 weeks, while gold prices edged higher. The S&P Materials Index declined 1.8% and the Industrials Index fell 1.5%. The tech and energy were down more than 1%. Shares of Boeing, which has acted as a proxy for trade war tensions with China as it is the single largest U.S. exporter to the country, fell 3%, weighing the most on the Dow. It was followed by construction equipment maker Caterpillar, which dropped 2.8%. Chip makers, which depend on China for a large portion of their revenue, also slipped, with Intel down 1.7%. Shares of Chinese companies tumbled, with e-commerce giant Alibaba down 2.3% and off 4%. Declining issues outnumbered advancers for a ratio on the NYSE and a ratio on the Nasdaq. The S&P index recorded 2 new 52-week highs and 3 new lows, while the Nasdaq recorded 28 new highs and 22 new lows.